Hey everyone, I'm here with Howard Chan from Kurv. Howard, how are you?
Doing well, doing well. Was hoping for a quiet holiday season, and of course, it never is. And then, of course, the market. There's always something up with the market.
No preamble, nothing, just raw. First of all, let me congratulate you on Balls of Steel to come on my channel, okay, of all finance channels, and to talk to me. And I want to congratulate you on that because I have a little bit of a history. But you and I have a good history, don't we?
I think so. I think you were pointing out certain things in the market that was worth noting, and then I think uh, a lot of the questions you usually have are pretty on point, and so I guess there's no fear if you have kind of facts backing you, right? So it's always a joy to be on here. Yeah.
Good, good. No fluff. Okay. Last time your team interviewed me, you were going around doing interviews. I pretty much said no. My response was, if it's another stupid covered call fund, I don't want to hear about it because I'm not going to name any other fund companies, but we'll use the pseudonym Evil Max Corp. And all my experiences with yield, NAV, no, that's not the word. There is no such thing as NAV erosion. Marketing erosion. Putting out a specific yield that you don't earn in order to attract people who don't know better and think they're making an income. You can lose all your covered, not you, but Evil Max Corp can lose all their covered calls and still pay you out based on arbitrary the IV. It's just ridiculous. And so you have a reputation for being a fiduciary of people's funds. You didn't have marketing erosion. And I wanted to talk to you now about silver. What happened, and I'll tell you, it started in China. You have a great fund. Okay, we're going to look at it. It's called K-Slave. I don't know if you call it that, but I love that name.
K Silver, K
No, no,
Silver.
K-Slave.
Yeah.
I love that name. So you asked me about my thumbnail. You asked me, why does it say versus?
Yeah,
What?
why is it versus?
Why would you ask? I
I'm not
just
fighting anybody.
because I have skin in the game, Howard. Okay, unlike, let me go back to the meeting. There you are. Hold on. I have skin in the game, Howard. I'm not like these other. You're going to have to forgive this. I call them douche tubers. Okay? They don't have any skin in the game, nothing. They do spreadsheets and all of that. I'm going to compare your fund the way it should be compared. We're going to do Oracle total return, everything. But I have skin in the game. Let me get off this thumbnail. Okay? Hold on. There's another. See, this one doesn't say versus. We're going to talk about is silver the new Bitcoin. But hold on, let me see. Hold on. Do. All right. So I have pretty much this amount in your fund, something like 4,000 shares, and every day it goes crazy. It moves by like
It does.
$10,000. Okay. So, but it's been great. So what happened was the day before, today markets are terrible. Even though this is not a commercial for your fund, we're going to pull up your funds. And the reason why it says versus is because I have skin in the game. I have about $250,000 invested, and I'm watching it go up and down every day. And you know what? Let me jump right to it. You know what? Let me talk. Let me let you talk for a minute. Go ahead and let me throw one more thing out there. I can't resist. When I look at companies like Evil Max Corp, okay, and they have like 50, 60, and again, this is not any fund company, it's just in general, okay? They pay a high yield, they have like 25, 50 different funds, right? And they look to me that there's not a person writing these covered calls. Like every one of them seems cookie cutter. And they're written stupid, like no options trader would write them. And your funds are different, they're not like that. And the silver fund, I love the fluctuation with the silver. Tell me what you're doing with this fund and why it's different. It doesn't seem capped, like it's wild. So Speak freely. I'm sorry.
No. I'll speak to the strategy and how we manage it. And then maybe kind of the context around what's happening, right? So I think for those who know about us, we have been looking to a lot of our strategies look for places that don't generate income because a lot of investors have this trade-off between growth and income. And so, we've done it with technology stocks, which generally don't distribute. And one area that, generally do not distribute income is also commodities. And so we want to make or have a strategy essentially that looks at various different commodities, specifically precious metals, so in gold and silver. And then how do we do it in a way that generates income? Now, one of the things that, as you have mentioned, is that a typical cover call strategies generally, I think the investors in it, they have to accept that over a long period of time, the strategy will probably underperform the underlying because you are in a cover call strategy giving up some of the upside for the income. And so what we went back to the drawing board is that, what kind of strategies do we want in our portfolios? And we want to be able to provide both the income component, but also the return of the underlying. So we kind of look through our strategies, and the part of the reasons why cover call strategies generally underperform is that when you have the underlying plus the cover call, your exposures to the underlying is usually less than one. And that's why, from a technical jargon perspective, that's why you underperform over time. And so what we want to do is that holding the underlying plus whatever option strategies we have on top, you still have an exposure to the underlying roughly around one. And that's how you would keep in line with how the underlying is moving. And so that's very much how we manage the silver strategy, the silver enhanced income strategy.
Oh my God.
Which is that we have.
Howard, I let you say all of that without interrupting you. I so wanted to stop you and get to what the people wanted to hear.
Okay.
If I let
all
you
right.
say that, they're gonna think this is like a sponsored thing. Okay? And
Okay. All right.
Yeah. I really just I was being polite, but here's the truth of it. Okay?
Yeah.
I don't think that most of these funds have a room full of traders that are there overseeing these boilerplate funds. When I look at something like K-Silver, okay, K-Slave, I think that you're there actively managing the trades. Not maybe you have an algorithm, but I think that you're overseeing it. Am I wrong to think that?
Yeah. So the fund.
Wait, let
the
me just clarify
strategies-
my question.
Yeah.
It's not just a set it and forget it, is it?
No, the strategy is run by the primary PM is Dominique, and then I work with Dominique to run the strategy. And no, it's very active because we have to roll many of the options on a weekly basis. So we have to see where the markets are, and then we have to determine what the risk environment is and adjust the strategy
So the
based
answer to
upon
the question
the market.
is that it's not a set and forget algorithm.
No,
Okay.
I mean there's certain components that is systematic, and then most of what we do is systematic, but it's really dependent on the market environment week to week.
All right, so
Yeah.
let me take you back, okay? Christmas night, okay? I had let me see if I could pull this up. What do I have here? No, that's not it. All right, I had my feet, not even that. I have so many things open. I had my ear to the ground, and what I heard in China was about the spot price of silver exploding. Okay, and I posted it in my Apex Collective group at 3:30 a.m. New York City time. I said that you're not going to find it on Google. It's not showing up anywhere. Okay, this is straight like off WeChat in China. Okay, and I told them, I said, let's go ahead. This was the morning after Christmas when the markets opened. I said, what's the easiest way for us to access this? Because I know how your fund moves. So I told them K-Slave. And we all bought K-Slave. And you caught a 10% move that day on the upside, which was amazing. Absolutely amazing. So I said, Howard Chen, China, WeChat. Let me talk to him. Let me go right to the source. So Something's going on with silver, okay? And I'm going to compare you, okay, to the underlier, which everyone does, and they're stupid for doing that. You know what? Let's do that right now. Hold on. I want to show you something that people do not look at. Hold on. Let me see. How can I move this over? Oh, let's close that. Let's close that. And let's move this here. Okay. People compare you to the underlier. If people want to look at an S&P 500 index fund, they compare it to the underlier. This is an old way of thinking. It's incorrect and it's wrong. I'm going to show you how I judge your fund, and then you address that, and we'll talk about the silver thing too. Okay, right now, all over social media, the hot thing is silver. Okay, it's not Bitcoin. Bitcoin is in Bitcoin winter right now, and we can talk about that. And I've been in Bitcoin since Ethereum was $104. It's almost 10 years that I've had crypto trading channels. So when I look at your fund, okay, hold on. You don't need that much space. I need to give more attention to your fund. There you go. All right. When I look at your fund, people would compare this to the underlier, okay, which would be something like iShares, okay, SLV. All right. Now, when we look at this, 1 month to 1 month, they beat you, right? 6 month to 6 month, okay. Of course, the underlier beat you, because this is the ignorant way to compare a fund. You are an income fund. Let's eliminate this. Let's compare.
Well, I think
wait. I want you to see this and tell me what you think.
Yeah.
Let's compare your silver income fund to the closest thing that pays monthly, which would be this. Let's forget the index. Let's compare horses to horses. You can't compare a Corolla to a Ferrari. Okay, we're talking about generating income. So over the last 6 months, we look at your only competition. It's up 24%. Over the last 6 months, you're up 41%, Howard. That's the comparison I wanted to make. That's mind-blowing. Even over the last month, you snagged 19%. Forget the underlier, because we're comparing an income vector. You're paying income. Look at this. Your closest competitor in the past month on silver, and they're doing covered calls, okay, even though it's an ETN, whatever. It's the closest. They went up 2%. K-Slave went up 19%. This is why I wanted to have you on. I'll shut up and listen. Go ahead.
So the first thing I'll mention is that the 6 month number is not correct, because the fund was launched at the end of September. So there is no 6 month number for the silver strategy. But what you show is actually
look at the 1
yes,
month.
1 month is yeah.
Okay, so in 1 month you smoked them. They have 2%,
yeah,
and look, you have 19%. Go ahead. Sorry.
That's actually to the first point that I kind of mentioned, which is that if you do a straight cover call strategy, you should look at also total return basis, that you're going to underperform the underlying. In the silver strategies, we do over time expect that we will meet or outperform the silver in that's part of the investment objective actually for the silver strategy that we run. So that is actually, I didn't even need to give sort of my preamble of where the strategy came from. That is the proof point that like over a period of time, we are not satisfied with just a straight cover call strategy. We want to actually be able to meet or exceed the performance of the underlying, plus generate income in the strategy. Yeah.
All right. So the income looks like it's playing out. Well, the last one I think was 50 cents for the month. Is that correct? About 50 cents?
Yeah. The income is generally proportional to the volatility of the asset, and silver is more volatile, say, than gold and other things, so that you should expect the distribution to be higher than the other strategies that we run. Yeah.
Right. So I mean, I don't care. Like when I showed you 2 screenshots of the account where I have I have it isolated. It's pretty much just that fund. It makes it a lot easier. You don't need spreadsheets or anything. So, and I don't drip or any of that nonsense. Where the game begins for me is with the NAV. Okay, it's NAV versus NAV first, no matter what kind of fund it is. And only then will we be able to talk about total return when I add in your dividend as a bonus. A dividend should not be a punishment. A dividend should be a bonus. And I want to ask your opinion. I want to go off on a different direction for a second. Do you think that it's just psychological, or do you think that it's really harder for a fund to recover when it has to pay out weekly?
I think depending on the asset class, I do think weekly pairs have a harder time to compound the capital in the fund just because you're constantly paying it out. So I'll give you in a scenario where it would be more
When you say
difficult is
compound,
that,
do you mean
yeah,
retain your NAV?
yeah, retain your NAV.
Okay, all
So
right. Go ahead.
um, let's say 1 week you had a market drawdown of 5%, right? And you uh, kind of pay out the capital. And it depends on how you manage it. Sometimes people have to liquidate to pay out the thing, or in our case, we write calls to harvest the premium. So on a NAV basis, you depending on whether that cash is invested or not, you want to have, if it's invested, you want it to have the rebound, right? To come in, right? Versus if you have to liquidate. And so we have one weekly pair where we're very conscientious of that. So we only pay out sort of the premium that we harvest to avoid that situation. But certainly, if you have both an outflow and you have a weekly pair, it does put you in a slight disadvantage where you're reducing risk when the market is selling off. And then if the market rebounds, you don't have the same risk on to come back up. So I would say you can manage it in a way where you could lessen the effect, but you're more vulnerable if there's like a huge market swing in the fund. Yeah.
So you don't think that it's just psychological on the participants' side? In other words, the investor. They see themselves, damn, I got my payment, X amount of dollars, and I'm down by X amount of dollars, X dividend date, and oh, here comes the next dividend date, and I'm still not recovered. So you think that there is a mechanic to it, that paying weekly could actually distort the payouts. Is that correct? Yes or no?
Yeah, I think so. It's very dependent on the portfolio management style. So there is as an investor, you need to be conscientious of what that manager is doing. You could manage in a way where you can minimize the effect, and then there's other ways where it would magnify actually the effect. So yeah.
All right. So, the reason, that's the sound of Bitcoin going up just enough for me to enter my short. In any case, you stayed away from the whole Bitcoin nonsense. I noticed that you don't really have a crypto fund, which I think is actually a great thing right now. How do you feel about that as
Uh,
Kurv?
we did file for a few. Um, we think that um, I think if you right now, I think a lot of people compare it obviously as kind of digital gold or a hedge. The correlation hasn't really quite proven out, but if you see it just as a asset that is very influenced by demand and supply, fixed supply really, it's more in some ways behaves more like a commodity than anything else. Yeah.
Well, its true value is the fixed supply, and that's why I laugh at people like Tom Lee, okay, who I absolutely have no idea what they're talking about when it comes to crypto, and he's doing it with Ethereum. And Ethereum has an unlimited supply. But who cares? He's buying it with other people's money. He was wrong in the past, he'll be wrong again. Anyway, so I notice a shift to tangibles. Okay, we went from everything being digitalized and tokenized and Bitcoin to people now feeling the effects, and it's just the beginning of a crypto winter. I've gone through this so many times. I mean, I remember when we thought $10,000 was the top. Okay, it was. I spent 30 Bitcoin on a Lamborghini. In any case, nowadays that's crazy. So here's the thing. I noticed that, well, we've seen what happened with gold finally, and I'm not a metals bug at all, okay? But now we're seeing extreme movements in silver. And the get rich quick crowd, who is the leader in this high yield space, they're noticing silver. It's not just the metal bugs, okay? They feel they missed gold, and silver's like the ghetto gold to this new generation. I'm not talking about the old, silver stackers. I'm talking about a new generation. And the reason when I heard what was happening in China and I said, let's jump in, okay, was because, and the reason why we went into your fund was if we got stuck in it, which I'm stuck in it now, I don't want to sell, there's that yield. There's that nice payment every month. Okay, so what if we're at the top of a bubble? What's going to happen to the fund? Because I have boots on the ground. I'm not just a YouTuber,
Yeah.
I have like 250,000 in it.
If you don't mind, if I could give you sort of the thesis or why gold and silver is doing, and then I can talk about the technical that's just happened in the last few days, and then how the fund would, maybe.
That'd be great.
All
And
right.
just before
So,
you do,
yeah,
the thing that I'm bringing up to you is what really moves markets are people, humanity.
yeah.
If we can factor in what the people are thinking, we can know what the markets are going to do. And that's why I'm saying there's this momentum behind silver. Now, go ahead, please continue.
Yeah, so it's been quite a few years now, and I think most people realize this is that the U.S. and most developed countries have been essentially issuing more debt, printing more money to sustain economic activities. And so, especially this year, and probably towards the end of last year, I think the markets have become a bit more conscientious about the money printing, especially since last year and this year, the interest on U.S. debt is becoming a larger part of the fiscal deficit. I think it's like the third biggest item on the U.S. budget, right? Um, and so when you have a concern about fiat currencies, usually people look for real assets to preserve their value, right? To preserve value. And the common way in which people do that is usually in the form of gold, right? And this is why we kind of filed for a few crypto ETFs also, is that I think people are looking for alternatives to fiat currencies to retain values in whatever their property they have, right? So gold, obviously gold is a natural choice because it's been accepted as used to be in the gold standard, and as people have gone into gold, uh, you see, one of the things you want to look at is who's the marginal buyer, right? And so you've seen a lot of, in institutional investors, you want to see where they're buying because they usually can affect prices of asset classes. And there's no bigger institutional buyers than the central bank. And you've seen a lot of central banks start to diversify their balance sheet by buying gold. And even there, the central banks, once they have gold, they also want to further diversify that. And then silver is sort of I say, poor cousin of gold in
Ghetto
terms of
gold.
reserve currency, right? It
Yeah.
actually, if people don't know this, that most countries before the gold standard was actually on a silver standard, right? And so this problem is likely to continue, meaning people are looking for gold and silvers to retain value because it's
But are
unlikely
we
that
at the
most
top
developed
of a
country.
bubble right now?
My personal view is we might have a local maxima, but I think the long term, many of these currencies, many of these precious metals will continue going up. And the reason is because the problem cannot really easily solve itself. the way that the US and other developed countries is going to reduce this deficit is one of two things. Either they cut expenses or they increase income. Cut expenses means that a lot of the government will have to cut a lot of social benefit, like social security, Medicaid. That's really, really hard for a politician to do, right? So the other way is to increase income. And that generally means increasing taxes, which is also very, very hard for a politician
What about
to do.
printing
So this
more
problem,
money?
yes. So the way in which you would do that is, when you issue more debt, and for a country that can has its own currency, they're not going to default. And the way to do it is actually to inflate their debt away, which is printing more money, which means there's a further investment case that if you know that the only way to go out is to inflate your currency and inflate that fixed debt that's going away, you want to have your store of value in something else than the fiat currency that's going to be inflated, right? So that further gives like the investment thesis why people are looking for alternatives to fiat currency. So that's why we think that gold and silver is just sort of at the beginning of this long-term secular trend.
If I stay in your fund, okay, if I stay in your fund and we go through chop, am I going to get killed like in a covered call fund?
What do you mean by chop?
Chop. Let's say the price just chops back and forth. Right now, it rocketed up. Okay.
Yeah. So the fund, the strategy itself.
In other words, let me throw this in before you answer.
Yeah.
I want to stay in your fund. I don't want to trade it.
Yeah.
Am I going to get eroded away by chop? Just that whipsaw back and forth that happens to many funds like this.
No, because the strategy is actually looking to track spot, right? So if you look at the holdings of the strategy, we have a synthetic long that's in SLV or more recently SIVR, and those are silver spot ETFs. So we're actually tracking spot, and maybe let me kind of describe a little bit of the technical things.
There's a huge advantage to that. I'll let you finish, but yes. I like that you're tracking spot rather than paper.
Right, and this actually leads to the problem that has happened in the last few days with futures, and I'll talk about the risk management of the strategy. Yeah. So what happened in the last few weeks? It actually happened a few months ago. Actually, you saw this slight squeeze in silver, but it's really, really pronounced in the last few days. Is that one big change is that China had decided, we're recording this on December 31st, that today there's going to be you need an export license in order to export silver out of China to everywhere else.
Is this real? Is this a sell the news event? Do you think? Is it real?
So that's the question. I think that will be a question. I think, so what happened was because of this news, and maybe just to generalize a little bit,
people don't know this.
The silver doesn't have one price. There's different silver markets around the world, and I think the three largest silver market in the world is one that's in China. There's one in London, the commodity exchange in London, and then there's one in New York, right? And what you saw in preparation for this export license is that this price of silver in China has been going up.
Yep.
I think it hit like an $81 an ounce or something.
Even like
that.
85. It went crazy. The day right after Christmas. The day after Christmas,
the 80s,
it first exploded.
So typically, if you're in commodity space, it's very common when there's different prices for the same assets. You have this arbitrage trade that can happen, right? So you often hear you buy cheap and sell high.
Yep.
So in this case, in China, the price of silver reached 80 something, and then I think at the time, silver was still in the 70s or whatnot.
It was like a $12 or $13 difference in arbitrage.
Yeah. So as a trader, what you would want to do is you want to buy silver where it's cheap. So that's either in a New York or London market, and then you want to sell where it's more expensive, which is in China, right? And so when a lot of people want to do it at the same time, what you saw was there's a rise in price, and
Premium. Yeah.
that largely explains why I think on Friday silver prices went up 10% because people were trying to get into
But your fund went
silver,
up
right?
10%.
Yeah,
You
well, the
nailed all of
strategy
it
is meant
because
to.
you're on spot, right?
Yeah, that's correct. That's correct. But there is sort of a dislocation, I would say, right now in the market, which is that if you look at uh, uh, the futures market in London versus New York, there's actually a big difference. And this is worth maybe talking a bit about, which
Okay.
is that most silver trading, it doesn't happen at spot. It happens sometime in the future. So people use futures to get exposure to silver. And typically, in the silver market, you typically see this effect called contango, which means that there's a price curve in which silver in the future should be priced higher than silver right now. And the reason is because there's storage cost to having silver, right? You need a big vault, you need
Yes.
security. So, having silver, getting silver in the future should cost more than it is now. But because of this sort of dislocation in the market, the curve is inverted and it's in a form that most people, people call backwardation, which means that future silver is actually cheaper than silver now, which means there's a lot of demand of silver now in the market. Yeah. Which is a bit of a stress. And so, and this is because people want to get silver now to sell to China,
Right.
right? Um, and then the New York futures curve is still very much in contango. And so I think, and so there's some concern in the blogosphere or in social media is that there's a lot of what they call paper silver that's in the market, meaning that the notional of the future is
It
much,
wouldn't be
much
able to be
larger.
delivered, right? That's what it
Yeah,
means in
yeah.
short.
Yes. And then oftentimes when there's a lot of speculation in the market or leverage in the market, what happens is that the exchanges where these futures are traded increases margin requirement to remove the speculation in the market,
Yeah,
right?
and that dumps the
And so
price.
correct. And so on Friday, you see this huge rise, and I think COMEX, which is the New York future commodity
Yes.
futures exchange, wanted to maybe for risk management purposes or whatnot,
Slow it down.
increase margin requirement. And so that's why you saw Monday the price of silver dropped, and then again on Tuesday, which is yesterday, it rebounded again because again the
Right.
price of silver in
There's
China
such
elsewhere is
demand.
still
Yeah.
very high. And then last night
They did it
they
again, right?
increased the margin again, and then you
Yeah.
see now again silver prices have come down, right? So that's explains at least what for us explains sort of the price action of silver.
But
Yeah.
I think
Um,
long term, and just to add into what you're saying, is that
yeah.
this can't stop silver. If this had the ability to slow down or stop silver pricing, and I am not a metals bug, I'm a crypto person, okay, it would be in the single digits by now because they do this every time with increasing the margin requirements.
Yeah, and every time they increase the margin requirements, it becomes less and less effective because there's not every time you do this, you remove more speculation. So it becomes more and more of like the price driven, a
Yep,
demand
yep.
for silver, right? Now, a lot of this hinges on an assumption, which is, I think a lot of people have noted that on paper there's too much silver versus what is available to be delivered, and that's probably a crucial thing to look at, which is typically on futures only 2% gets actually delivered. So a typical market you do see much more notional on futures, on derivatives, on silver than actually is delivered. That's actually normal market demand. And I think the concern is that if that delivery rate, less than 2%, were to increase, if there would be sufficient silver that could be delivered to do this
So,
arbitrage,
okay.
essentially.
So they don't have this problem with gold.
Uh, yeah, well,
Not
I
to
think
this
the
extent.
future notional, probably not, and also, um, uh, I will say that silver has been probably the supply of silver has been undermined for a few years, and there's actually one difference between gold and silver actually that's very important.
Yeah, it's Elon
Um,
Musk.
there's there's not a lot of utility in gold other
Yep.
than for jewelry. And gold, there's lots of gold in lots of vaults, and if you have to move the gold around, the worst case is like the flight that you move gold between one vault to another. um, Silver is a little bit different than gold, is that there is actually industrial use. So all this talk about like AI infrastructure and
It's all
energy
silver.
consumption for
Yep.
energy, silver is really used a lot in solar panels, and actually
And
that's the reason
batteries and
why.
everything.
Yeah,
That's why
so
while you were talking, I said Elon Musk. This is the new
yeah,
factor
yeah,
that makes the difference than ever in the past when it comes to silver. This is why I think it has the potential of being the next Bitcoin in a way. And this is why I keep going back to, can I stay in your fund?
yeah. And it just and that's why actually there is a Chinese market in silver, because most of the world's solar panels is actually built in silver, so they need a local
Hmm.
ecosystem and demand for silver. Maybe part of the reason is the export control. Maybe there's geopolitical kind of maneuvering with the export control, but there is I think a lot of the demand in silver is actually in China, and so maybe that this is a way for them to keep the supply of silver in the country.
Let me
So yeah,
I want to go back to your fund for a second because this is what people really
yeah,
care about. It may seem like I'm interrupting you, but
yeah,
I'm giving you
yeah,
what people care about. Okay, so
yeah,
there's a difference. There's paper silver, which is buying an ETF. Okay,
yeah.
now your ETF is the equivalent to the average person of stacking silver and getting dividends. Am I right?
Yeah. Uh,
Because it's on
yes.
spot.
I'm not sure what stacking means,
In other
but it
words,
does
it's the
have
equivalent of
exposure.
as if you invested in physical silver.
Yeah.
Okay. In other words, the movement, let's call it. Okay. Except you don't have the silver at home. But the up and down movement as you stare at your portfolio is the equivalent to like physical silver and you get a dividend. Is that a good way to
Yeah.
look at it?
Uh, I would say that we generally track silver spot rate.
Yes.
The way that we get that exposure is through options, right? So options on what's the underlying SLV, which is the spot silver ETF, or SIVR, which is also the
Right.
spot silver
Right.
ETF. So maybe then maybe
For a
go into a
compliance
little bit of.
perspective, what you
Yeah,
are trying to tell me is no, Oracle. Okay. But from a regular Joe perspective, it looks that way to us. And that's what people might be looking for. Instead of buying silver and putting it in their closet, they could have access to the action of spot silver in your fund and get paid a monthly dividend. Is that the way, as an average Joe,
and
I could
get
look
paid a
at it?
monthly. That's correct.
Okay.
And then so here will maybe I'll go into the risk management. So first of all, it's important to state that we don't use futures, right? So this problem with like contango and backwardation, it does have some effect on options, but because we're using options on spot, that effect is not the primary driver. The primary driver is the spot rate of silver for the options that we use. And the counterparty, if you use future, your counterparty is COMEX or whatever the future exchange is. But because we use options, our counterparty is the OCC. right? And then we follow the margin requirements of the OCC. And so we are the OCC requirement for short puts is actually roughly 100%. So we are our puts are backed by if you look in the strategies that we run, we have right now about like 66% or something like that in US Treasury or money market funds.
Right.
So our short puts are backed by those. And then the other 30% is the long call. Long call, for those who, the most you can lose is the premium that you pay for the call, right? So that it doesn't need to be backed. So, this effect of COMEX increasing margin requirements has an effect on future holders. We are already at roughly 100% margin. So any margin increase actually would not affect us at all.
Right. And just so people at home know, that has nothing to do with the ETF when they think of margin. That is, anytime you hear this type of margin increase or whatever when it comes to silver, has nothing to do with your ETFs or their ETFs in their portfolio.
That's right. There's a margin requirement within the fund, and then whatever you hold, there's a margin requirement from your broker, which is not related to the ETF, right?
Because I know people will they'll misconstrue that.
Yeah, and so in terms of risk management, we are already our counterparty is the OCC, and let's say the requirement for short puts is actually pretty stringent on the OCC. So there's like no, we don't that.
People don't even worry about that. They're excited about your fund. They're excited about the potential of that's the technical stuff that we leave to you. They're excited about the potential of the fund. So, I'm looking at it because look at everything uses silver now and nobody's talking about it. Elon Musk tweeted that the spot price of silver going up is a problem, which is great for us and great for people in the fund. Because this is what everybody cares about. How much money can we make in your funds, Howard?
Right. But I do want to be, very clear, which is that, if silver goes up 10% on Friday, our fund, also was able to track that. But if the silver went down, 5%, the fund itself will also go down. So it is exposed to spot. Whatever
I'm down 15,000 today. I know.
Yeah. Yeah.
But is it but wait, Howard, here's my question about this, since you brought up being down. It's kind of uncapped that it'll move up as freely as it moves down. I've seen that over the last few days. Because that's what's crippling in a traditional covered call fund. That's why I've made videos that say covered call funds suck. When we're talking about single stock covered call funds and things like that, I was very against them. But in this instance,
and that's what. And remember when I said when we went back to the drawing board and we want to be able to get the exposure of the underlying plus generate income. So that's actually what we mean by that, which is that we have roughly around one exposure to, depending on how the market moves, we might be a little bit over one or a little bit under one, but roughly one exposure to what the underlying is, so that you get one of the things that cover calls are not very good at is if there is a sudden increase in price, you get capped up on the call, right?
So in simple terms, are you capping only a small part?
The way that we structured the payoff curve is that there is a range in which we get like a premium above the underlying. And if it goes a lot higher, it would just be one with the underlying. Now, so there's not extra premium.
Okay, so in other words, it's not levered.
It's not levered when you combine all of the options together.
Yeah.
Well, I want to be careful with the word levered. Like, depending on what the underlying do, we might be 1.1 or 0.9 because of the options versus the collateral. So I think that the economic exposure for the strategy is that we generally will track the underlying. Yeah.
Oh, Howard, you're so bound by compliance. I notice when we talk that you're so careful, and I don't mean to push you over boundaries, but yeah, I get what you're saying. Okay, but it's so funny to watch you constrained. You probably have another monitor up, and you're like, no, no, don't say that.
Well, we want to disclose the right risk, for the strategy, and that's why I want to make sure that the worst thing for a manager is like people have the different expectation of what the fund or sorry, what the strategy is doing, and so here I just we are influenced by the spot. So if the spot goes up 5%, the strategy is looking to track that 5%. But if the spot goes down 5%, the strategy will also probably fall 5% as well. So I don't want that to be misconstrued in terms of what the strategy is trying to do. Yeah.
No, because it just feels. I mean, as somebody who's in the fund, and I mean, I'm enjoying my experience in the fund. I like the rapid ups and downs and everything, but it just feels like it's uncapped. It feels like it's not slanted in one way or another. For a while, I was looking at funds that were supported by swaps, and they were levered 1.2 to the upside and 1.2 to the downside. It became the biggest thing. We were like, here's the answer to marketing erosion and blah, blah, blah. It turns out that, it's okay to be evenly levered on the upside and the downside, okay, on paper. But in reality, it was way more levered to the downside, and it felt capped on the upside. It never got the 1.2 up. So they're devastating, and I don't want to name or say that it's Roundhill, but it is, and I know because I have skin in the game. I've been in them. I don't want to touch any swaps anymore. I don't feel they work as they do on paper. Real money and a spreadsheet is very different.
Yeah, and I think you know I mean, I think if you look at the strategies that we focus on are places where we think the market is going to be. I think I think the fiat devaluation, the competitive devaluation of fiat currencies isn't going to go away, and that's why, despite short-term kind of vol in
Volatility.
these asset
Yeah.
classes, yeah, we think long-term it's still it's kind of the logical outcome if you're going to devalue your currency through inflation, more debt,
You know,
money printing.
that makes total sense. A lot of people, I've been in crypto so long, right, that I've seen it. And a lot of what people don't realize is the rise in Bitcoin is not only demand, it's not only the limited availability, but it's really the perception, okay? And it's the devaluation of the US dollar. People see this when they see shrinkflation, when they see that their laundry detergent is a half the size, but it says concentrated, and then it goes up in price, right? And that's because the dollar is becoming worth less and less. So as the dollar becomes worth less, things like gold or even Bitcoin seem like they're worth more dollars because it takes more dollars to buy one Bitcoin. People didn't see that. And I think this could have the same effect with gold. I really think that, with silver. For me, and again, this is not paid promotion or anything. I'm in this and I'm talking to you because I got skin in the game. I like the fund. I seen the way it performed, and I reached out to you. I don't do reviews. I don't do fund manager interviews. I interviewed you, and I interviewed Colonel Sanders, who will never interview with anyone again. He's in hiding, okay, from the corporation that will remain nameless.
I think also the investment thesis in silver is that it has one additional driver than gold, which is the industrial use. Um, if we were to meet all of this demand for data centers, which requires more energy, which means you need more solar panels, all of that would require actually more silver to be used. There's some, people say, oh, well, the other solution is to substitute silver with copper, but copper that substitution process will take at least 3 to 4 years. So this is not it's not a short-term solution for the demand of silver.
Hmm.
So I think, I'm not a gold bug either, I'm not a silver bug either.
Right.
But we just see more and more use cases and demand for silver. Gold is more of like a retaining value. There's not a lot of uses other than maybe your teeth or something, like, or jewelry for gold.
Right.
In fact, silver is used a lot in dental,
Right.
also,
Right.
right? But it's a small part. But we just think there's just a lot of drivers that would demand a higher price in silver. Yeah.
So when we look at, so the main thing that people want to know about a fund like this is because of the way you manage it. Let's look at a covered call fund that was very popular. Okay, MSTY, which was on MicroStrategy. It got destroyed because of the underlier, and it was never able to catch up because it was forever capped. If we have a crippling event in silver for some reason, we'll be able to catch up because of the way you manage this. That's what people want to know. I don't expect a crippling
Yeah.
event, but I mean, you're not an
Yeah.
algorithm. I feel
So
it's you. It's different, Howard. We've spoken a few times. Go ahead.
yeah. So we don't the origin of the strategy is
Hmm.
so that we don't hit that cap that a typical cover call ETF would have. Yeah.
Because your team sent me an email, and I didn't send you the nicest email back when you're doing your interview. I was like, if it's another covered call fund, I don't want to hear about it, right? Because I was very anti. I mean, we all, over the past year in this high yield segment, we've learned a lot of lessons, okay? And we've learned that there's no free lunch, okay? This ROI myth and all of that. The best we can do is retain our NAV, which I have to say, Kurv has always retained the NAV better than anybody else, even in the most difficult single covered call names. And that's why I wanted to talk to you. I don't feel, look, am I right in thinking, you could tell me yes or no, that the days in like when you would see a boiler room in the 80s of like traders all trading it, that's not what's happening behind these big ETFs. There's maybe a couple of guys, or they're outsourcing it to somebody who's using an algorithm. Am I right? That most ETFs are just a set and forget program, and that's it. It's not a room full of traders.
Yeah. I mean, I think if you have a lot of ETFs, I think it's very hard to just from like headcount perspective to
Yeah.
hire a headcount just to run one ETF. It's 20 people to run 20 ETF probably doesn't make economic sense for an ETF manager.
Right.
Um, but I will say for our strategies, we do on a weekly basis review the portfolio because for example, right now, implied vol in silver is extremely high,
Mm-hmm.
right? So it wasn't so 2 weeks ago or 3 weeks ago. So we're active managers who are constantly thinking, how can we use this to an advantage of the strategy? You don't always get this high applied vol. This is kind of a special moment. So those are things we do. Dom and I talk about every week. And we set what we're going to roll into the following week, and we make sure that that's how we're reacting to the environment.
See,
Yeah.
from a marketing perspective, you don't know what gold that is. Okay, that's amazing because it's real people managing the fund. And when you mentioned Dom, I subscribe to your channel. I've seen the podcasts. Okay, and so the small comparatively, I know your AUM is growing, but the comparatively, the smaller AUM, the more boutique type feeling makes me feel that I'm not in a cookie cutter fund, that no matter what happens to the fund, the managers are going to make their money. They don't give a shit. When it goes down enough, they're just reverse split like nothing ever happened, and it's forgotten and the fund continues. I don't feel that with Kurv. I never felt that. I get that more boutique feeling. Some people hold that against you. Like, oh, look at their AUM. Most of those people are not even on YouTube anymore.
I will say and I this is very true for because we have fewer funds, every fund is perhaps more important to us because we need to be able to show that we can generate performance, right? And I will say, um, you know, in our gold strategy, which um, has a little bit longer history than the silver, we're actually outperforming uh, spot gold.
Mm-hmm.
So again, we need to prove that um, what differentiates us is that we're using option strategies to generate income, but we can also outperform the underlying. That's also true for our tech strategies and all that
Do you
stuff.
have
Yeah.
an income goal? Like a percentage, like a goal of what you want to earn, and then the rest stays in the NAV, or you just pay out what you earn? How does it work with the silver fund?
Uh, Typically, it is proportional to the volatility of the underlying. So, for example, silver is roughly about twice as volatile as gold. So you'll see the distribution for silver to be about twice that of gold. Now, week to week, the vol might be a little bit different. So this week we have a bit more volatility, right, in silver. So what we try to do is sort of the extra premium we may hold back for a rainy day in case vol drops all of a sudden, and then
Mm-hmm.
we don't usually get the amount of premium that we look at.
Right.
So that probably on the margins we manage that, but a lot of it is just what is the market giving us in terms of implied vol in for the underlying asset.
So, in other words, some extra premium might be put aside, okay? So, in case 1 month you lose all your trades and you still want to pay something out, you can pay that money out. It's kind of like to smooth out good months and
Yeah, to
bads.
smooth out the
See,
distributions.
that's
That's
how
right. Yeah.
active management should be, not just default to, oh, pay the IV. You know, I mean, that's why we respect your funds. Is there anything else that you wanted to talk about? I mean, I'm a holder of the fund. I'm excited about it,
Yeah.
but
I mean, the one I guess the thing that you brought up, which is worth mentioning, is whether this export control has a permanent effect on prices. I mean, I think legitimately the concerns about the delivery is I think there is something to I think if it's it's not gonna I think it's gonna affect the silver market, but not like but the thing is like to correct the short term thing, you actually need the arbitrage trade to go away, which is that you actually want New York and London prices to be at the same price or higher than in China. That's how sort of this
so what's going
imbalance
to
goes
happen
away.
tomorrow?
Well, so
Tomorrow
the
being
question,
the first.
well, the market's not open tomorrow, but maybe Friday.
Well,
And then
is it?
and then and then the other
What's the date that
the
it's supposed to occur?
uh today actually.
Okay.
The end of the year, I think. So the one thing also, and to mention, I mean, I'm bringing up factors that
Uh
we
huh.
as managers think about, is this is actually happening in actually not an ideal time, which is very end of the year where liquidity is very poor also, right? Usually outside of the Christmas and New Year season, you would have more liquidity. So a lot of the volatility is actually also part of the reason that the volatility is rather high is because just poor liquidity. There's not people are out, right? They're
Right.
not one little trade can affect prices a lot. Um, so, you know, as a thought experiment, I'll pose this is that one way to solve this delivery issue is, first of all, there's a lot of like, I look at a lot of the feed on social media, and some of them don't make sense to me. Like you can't look at gross notional of futures. You actually have to see net notionals, who's short, who's long. That's really like how you
Mm-hmm.
decide. Um, you know, the I think the key is like does the delivery rate tick up? If it doesn't, once in the new year and then the liquidity comes back, if delivery rate doesn't tick off, then maybe this will slowly kind of resolve the short-term technical issue. Um,
But do we
if
even
they need
care?
deliver,
Do we even care about the technical issue, the arbitrage difference?
I mean, as a manager, I typically prefer less volatility and be. I shouldn't say less volatility, but the price action shouldn't be determined by technical issues, but rather
Right.
strong underlying. I think that's a better way to invest because technical reasons, a lot of times you can't really control. It's a kind of a force de jour, majeure kind of thing. Um, so, I, you know, but I do think um, what is clear is that silver is becoming more important,
Mm-hmm.
right? From uses and top of mind. You mentioned, Bitcoin is important because people are starting to believe it's an alternative to fiat currency. I think that is also true for silver because people is like, okay, what are alternatives to the dollar, right?
Yeah.
And as that narrative becomes stronger, that also provides price support for gold and silver, etc. So that's also important. But I think, despite what sort of short-term technical moves, I think the long-term thesis, we still remain pretty true to the long-term thesis that there's just going to be more demand for this. Yeah.
I couldn't agree more, especially as technology moves forward. I'm excited about it, and you have a whole host of other products, but I only talk about what I'm in. And right now I'm in K-Slave, and I'm liking it. So don't hang up, okay? Everybody else, is there anything else you want to add, Howard?
No, I hope everybody. We released a kind of our 2026 outlook, where we kind of spell out where we think the market is going to go, and gold and silver is, a part of that thesis. So if people are interested, it's on our website, and we talk about it in our podcast, Curve Your Enthusiasm. So yeah.
Yes. Yes. And so, I want to wish you a happy new year, but I know you're Chinese. It's like wishing a Jewish person Merry Christmas. It's not really your new year.
No, I'm American, and I still celebrate New Year's.
I had to say something messed up. Anyway, everybody, thank you. Thank you, Howard. Howard, stay on. Let's hang up on these people.